Hey, what's going on, guys? This is Dan from Landshark Education. So I want to make a video. I'm going to discuss fundamental analysis, and I'm going to dispel and show you why fundamental analysis for retail traders or traders doing income style trading does not work. So I'm going to use this case example today. I'm going to use Netflix, which was a stock yesterday, which we actually had discussed about 2 weeks ago on the radio show. You can actually go back and see. We discussed price targets and wanted to be long this stock. We had price targets based on technical analysis at 110 to 115 in this stock. Right? The stock is up 20% on earnings, right? Or it increased its market cap by $8 billion. Right? So what do you think from a fundamental analysis standpoint, what would validate or basically, say, hey, look, this should be $8 billion worth more? You would think it'd be a lot of money to give this type of valuation increase, right? It was $10 million in additional revenues they had in profits. So $10 million caused $8 billion in market cap increase. This is fundamental analysis. It's crazy. It doesn't make any sense. Everybody has a different concept of what fundamental analysis is, and we're going to discuss it in this short video and go through some concept with this. So first, let's define some basic topics of fundamental analysis. I'm going to show you why it doesn't work. I'm going to discuss price action and technical analysis and get into some basics of that. I'm not going to show strategy at all, so before you sit here and spend too much time in this video and you want to leave it, you can kind of get that heads up. So let's discuss what basic fundamental analysis is. So typically, fundamental analysis is stuff when you look at like Warren Buffett or like a Bill Ackman or a Carl Icahn, guys like that who have analyst teams going out and trying to figure out how to find the book value of a company, right? So we look at like assets on a company's balance sheet, liabilities, any earnings are coming up here, and you try to look at this and you try to determine what the stock or what the company's price should be worth. Right, so maybe you learn this in college or undergrad or from investing books, or what we've typically been taught from time in investing in markets is this is how you analyze a company. If you and I were going to do a deal and I'm going to buy your company, let's say you own a pool business, right? And you own a pool business and I'm going to do, right? And I want to buy your pool business. For me to go in and do fundamental analysis, it's pretty simple, right? I can go and see how many houses do you clean. What are your expenses? Do you have a vehicle that goes to the houses to clean them? Do you have any employees? I can figure out really, really easy, probably in a day or two, to figure out how much you make at your company, what your assets are, what your liabilities are, and then give you a 1 or 2 or 3 or whatever a multiple I could to own your business. Right? That's very easy to do. It's very, very hard to do, and it's almost outdated. It's really unnecessary to do it when you're trading securities. Right? When you go and look at companies, I'm going to give you an example of this. Back, I want to say in 2012 or 13, Yahoo, right, was taken over by a hedge fund out of New York. Right? Whatever you think about Yahoo's stock, whether you think it's bad or not, doesn't matter. I'm going to discuss from the standpoint of trading it. So Yahoo was taken over, and there was a lot of creative accounting that was done. There's some different things to bring up the asset's value. One of those things that was done is the hedge fund manager that took over Yahoo advised to Yahoo and said, you guys should short the Japanese yen. So Yahoo as a company owns cash on their balance sheets. Right? There's nothing stopping Yahoo to become a mini hedge fund in itself. They can go and trade currencies. So Yahoo shorted the yen, and don't quote me, but it was about $350 million to $380 million in profit was what they made. So this is a tech company. So a tech company who has email, Yahoo Finance, all these other items that they own. They made $350 or $380 million from shorting the yen this one quarter. So that money goes back to the main mothership, and that shows up as revenues that help the stock to increase. Not from its tech business, not from anything else, but from somebody who came in and said, look, you should hedge out your risk because they own a piece of Alibaba. And you should hedge out this risk, and they made money on it. By the time you figure this out as a retail investor, that this is what's happening behind the scenes, the stock price already moved. It's too late, right? By the time when you go to Starbucks and you look at the Starbucks line and say, wow, look, this Starbucks is always packed, right? By the time you go and look at the balance sheet and try to do your due diligence on whether or not you want to buy this stock because it has a PE multiple or insiders are selling, by the time you do all of that, typically the stock move is over, right? It's also very difficult to do fundamental analysis, right? You're going to meet people, and I'll give you an example. When I first started my career in finance, it was my intention to be an investment banker, right? The market crashed. I couldn't do it because it was hard to get a job, but I was trained in reading balance sheets, doing valuations on companies, and how to model potential sales in companies. It wasn't until I turned a trader at a hedge fund to figure out technical analysis and realize none of that stuff matters. Right? If you're Warren Buffett investing $400, $500, $600 million in a company, what that company's assets are, what their credit line is, or what their real estate holdings are for the company, that matters. Right? That certainly matters. But for somebody who is watching this and you're trading a 401k, a retirement account, an IRA, whatever it is, or even just a small trading account, that doesn't matter. It's not going to make a difference. Right? So let's use this example of Netflix. Right? Let's go back to this Netflix example. Right? A 20% price move on $10 million in increased earnings increased the stock's valuation of $8 billion. Right? Fundamentally, that's ridiculous by every account, and if you disagree with it, we'd probably have to have a discussion to figure out why you think that makes any sense. Right, so let's go to Netflix and let's go to Yahoo Finance. I'm going to use something simple that a lot of people tend to use to figure out whether or not they want to buy stocks. Right, so one of these concepts that's been taught that's just ridiculous in my opinion is trying to come out and figure out, right, what dividend yields are, right? What is the dividend pay in the stock? What's the PE ratios? Right? Again, most of us aren't venture capitalist firms. We're not managing $20 billion or $5 billion, let alone $1 million, right? So none of this really matters, right? And the people that say it does, or the people that like to discuss this, in my experience, typically either don't trade, or they're the people at dinner parties who like to sound smart. I go to a cigar lounge once a week to meet up with friends, and you have somebody there who's always talking about Warren Buffett. I can almost guarantee you that gentleman does not trade the markets. Right, but it sounds great to know all this stuff. And it also keeps people out, regular, everyday people, from investing in the markets because you think you have to come in and figure out what all these numbers mean. You don't. Right? Leave it to the bankers. Leave it to the analysts. That's their job. There's an easier way to invest and buy and sell markets, which we'll discuss in a little bit. So as I go through this, I can go to the financials. I can actually look at their income statement, the cash flow, the balance sheet. Right? And some of the times when I was younger, I was like, oh, this is cool. I know what this company's making. Right? And I thought I was all, witty and smart about this. And I could see this, but it doesn't matter. It doesn't matter because stocks don't trade at what their book values are. They never trade at those prices. Right? As traders, we use a different method called technical analysis, which I'll discuss. Right? You could even come in here and look at the profile on this. Right, figure out Reed Hastings, how much he owns of the company, right? Come back in here, I can look at statistics on this, right? The moving average here, the average volume, the float, the shares outstanding, what their profit margin is. This is all cool to know, right? It's great to know. If you're a venture capitalist, you're a large hedge fund. It doesn't matter for retail traders. And those people that discuss this, again, don't trade. I'm making this video in part because I was working with a friend of mine who's coming over from real estate, and I've been teaching him to trade as he's gone through our program, and he's asking questions. In fact, we're long Google for right now for earnings, and he goes, well, why are we long Google? What do you think the earnings are going to be? This is an honest answer. I have no clue what earnings for Google will be. I don't care what earnings for Google will be at all. What I care about is what that stock chart looks like. What I care about is, are the options, right, expensive, not expensive? Is there a trade for me to make so I can buy Google shares? That's what I care about. That's it. Right, this is called technical analysis. For those of you who have been trained in fundamental analysis and you've thought about the markets from this standpoint, this may come as a shock. But for some people, when they realize there's different ways to trade the markets, everything changes for them. Right? If you're watching this video and you have experience, maybe this doesn't help you. I'm sorry if you've watched it. So I'll walk through this. So we had a price target on this. Right? Technical analysis is price action based. Right? We look at price action to determine where we want to buy or sell these assets. Right? I'm going to show you something great about this. So I could go back to Yahoo Finance. In fact, I want to show you what happened today with this stock and how ridiculous this is. So today this stock gaps higher, meaning that it closed here, it opened at these highs here. Right? What do you think happened today? After a 20% move or an $8 billion difference in market cap of this company, analysts decide to come out and say, hey, look, this stock should be worth more. Right? Price targets raised. Right? Kramer's discussing it. All these people writing these articles, they could care less about your investments. Right? Talking about Narcos. Oh, everybody loves this show. Loving the Narcos show, it's a great show by the way, makes no difference on whether or not this company makes money or if the CFO doesn't, plan their budget correctly. Just because you like the show doesn't translate into profits at all. Just like in the Yahoo example. Right? Most people don't even know Yahoo did that. They did it and it made them a lot of money and boosted the stock's price. Right? What happened today is you had all these upgrades. So after the stock's up 20%, I'm going to scroll down and show you these upgrades that came through. Right? Goldman Sachs is up today. Nomura came out and said they give it a 130 price target rating. This company here raised it to 112. If I scroll down some more, UBS raised the price to 119 to 92. Great. Thanks all you investment banks. Thank you all of you analysts telling us after this entire event happened that now you think this stock is worth more. Right? Perfect. This was like the real estate agents in 2009 telling you that housing prices are still going to go up. I wonder why a real estate agent would tell you that. Are they working on commission? Of course. Right? These analysts have an incentive as well. The time to buy this stock based on technical analysis was down here, here, here. Right? You want to look at buying assets at a concept I'll discuss here at wholesale prices. You want to sell that asset out at retail prices. Right? This does not mean for you people or people looking at penny stocks that you think a penny stock is so low it's going to go to $15. Very rare that happens. What it means is you look at opportunities in markets and securities and try to figure out when they're trading cheaply. That is subjective. The way we trade at Landshark, we determine via our methods how we determine how something is on sale or if it's too expensive. Right? We discussed this move in the radio show. You can go back 2 videos and look at this. We had a live radio show. We discussed this. As this stock gets to this price level here, 122, 121, I already know from this standpoint here, based on technical analysis and this massive price gap here, that I'm going to be looking to short this stock. Depending on how this price reacts at this level, I can see if there's market supply. If there's a large investment bank or an institution, or who knows, maybe a big trader owns a lot of shares of this. Maybe they want to get rid of some of the inventory they own from $90 a share here, and they want to sell some of the inventory at 120 to 122 to protect and take some profit. I'll find out as it gets to this level here. That's technical analysis. Again, by the time you go look at your fundamental analysis, assets on Netflix, what they're worth, right, the stock price is already going to make a move. If you're looking at Netflix as an example and saying, hey, look, this thing's already too high, that's great. You have a concept of this. So that's a short video. I'm going to invite you to a webinar we have tomorrow. It's Wednesday night. We have a webinar coming out. You can come out. It's just not going to talk about trading. We're going to talk about mutual funds, financial advice, not advice, but education rather. We're going to discuss, how you look at markets, how to determine, how much you're getting charged at financial advisors, and how you can start trading on your own. If you have questions, head over to the website. You can register for it. I'm going to wrap this video up. That's a short information tutorial on technical analysis for his fundamental analysis. I hope you enjoyed it.